Hey guys, welcome back. In today's video, we are talking about the buy button removed again, how shorts are afraid, price of $42.56 showing, and many more in this video. First, we're taking a look at this. Just in, reports of Fidelity, Vanguard, and more brokerages are removing the button for certain stocks like AMC, MLGO, GNS, and more. Now, what we're seeing is that this occurred yesterday. Apparently, you have to call them to place an order. Now, there has been many theories for why this is happening. Firstly, when we take a look at this, Fidelity, Trade Republic, and others literally removed the buy button on AMC today based on no news. Why? Now, I want to say that this is obviously a bit of a tinfoil hat moment, and I don't want to base strictly on this. Of course, I've talked about that shorts have been afraid because of the lack of liquidity, because of AMC and GME's projections in the future, but take this as you will. GME wants 1.3 for bonds, AMC's float 1.3 billion. Roaring Kitty knows AMC was founded in Kansas City. Let the Kansas City shuffle begin. Now, like I said, this is a bit of a connecting the dots if you wanted to, but I do think that if we are seeing the buy button being removed, it's because they are panicking. It's because they are worried. Now, the reasoning for why I think that they're worried has obviously been clear from the very start. AMC is fundamentally improving. AMC is not going to be bankrupt anytime soon. AMC is continuously growing despite the fact that they want to suppress AMC through bad news. They're also, in terms of growing in investors, they're growing in buy pressure and not seeing actually anyone selling their shares, despite the fact we're constantly seeing people, suppress the price of AMC. When we see that most of the buy pressure are being routed into the dark pool and not actually having the positive effect like it should. But yet, despite that, the investors of AMC are still in. Now, all of that should be the reason for why shorts are panicking, because we've seen plenty of reasons. Firstly, Citadel is obviously being involved recently with many cases. They've been issued subpoenas with, of course, naked shorts. We're seeing how they had to close highly leveraged positions. We're seeing how they took a loss in February and very likely to take so in March. We're seeing how their prime lenders, Bank of America, are in a position where they could easily be margin called because of the derivative positions. Banks in general just don't have good liquidity. And so these are the reasons for why, despite zero news, AMC are again the buy button removed, because they are worried for what's to come. And you can see here, and this is with GME as well, for why they're panicking, because we talked about both stocks can trigger the squeeze. So if AMC were to squeeze first, GME will squeeze along with it. If GME were to squeeze first, AMC will squeeze along with it. The reason for this is because it's the same short sellers who are involved with AMC and GME. That's why it's never been a competition between the two, but rather that the two should work together. Now you can see, I have no doubt GME convertible bond has the market spooked. They didn't remove the buy button for nothing for AMC and GME. They don't spend 70% to dark pools for nothing. Systemic risk of their own doing, swaps and shorts send it. Now, this is obviously something that we have seen. Now, with all the data we've covered on this channel, with all the data you've seen in the past, you should already know how big of a situation this is. When we talk about how many synthetics being created, how many naked shorts there are for AMC and GME, how many tokens there are, how many FTDs that they're hidden away, how many swaps that can easily blow up. These are all things we've talked about in the past that are obviously very, very big. And it could bankrupt any individual companies at once. We've seen how if a company didn't have any insurance, like Archegos, like Credit Suisse, it would get cleared out. The only reason why some firms are still obviously holding on is because we talked about the DTCC's collaterals, where they are able to get money from other institutions that are not involved with the AMC shorts, and that's how they're able to stay on. So it isn't just a one company we have to take out. We have to take out multiples. It could be in the tens, it could be in the hundreds, but that's why it's been a very long fight. But we have seen how AMC and GME has been doing some major changes recently. Obviously, AMC improving their fundamentals, therefore they're going to make more money. GME, we talked about this. They firstly are spending their cash on Bitcoin, and now they've obviously got the convertible bond. I talked about this in the previous video. Obviously, you can look at it as a double-edged sword, and so I'm not going to say that the convertible bond is the best thing there is, because we've clearly seen the effect it has. But we've also talked about and highlighted that if these convertible bonds are going to work the way that it's intended to do, then GME has put themselves in an extremely good position. Obviously, everything comes with a risk, and we've understood that, but I'm sure that GME has also took that into calculations, obviously considered as well, and that's why they're worried about what's to come. You can also see here, because of this sort of information, if you say that they are worried about GME, if you say that they think that GME is going to fail, you won't be seeing this happening. But precisely because they understand the effect that GME will have, we're seeing now the pressure to start kicking in. So according to FINRA, GME hits record-breaking short volume of 30.88 million shares. So if you really want to see and understand, are they scared right now? Well, this should answer. Because firstly, when we take a look at this, it doesn't even reflect the true data. We have never seen the true short data of AMC, of GME on any platforms that are out there. But what we have done is we are able to use these as a reflection of what is happening. So I do believe that we are seeing an increase in GME shares. What I don't believe is that we're only looking at 30.88 million. But the very fact we are seeing it having this big of a short amount, then it means that the real amount that's being shorted, it's even higher than this as well. And that's why I use it. I use it for reference. But going to talk about, in terms of, are they worried? Are the shorts, spooked? Are the shorts scared? Well, this obviously explains it. Now remember, if they think that GME were to fail because of the bad decision moves that they made, then they won't have to short GME like this. They will just let GME crumble naturally, let it crumble on its own. But it's because they're seeing an opportunity where they can misdirect people to believe that AMC or GME is going to fail, that they've piled on and tried to short. And because GME obviously experienced the drop it has, it may get people to panic and think that they've made a bad business move. But no one knows whether or not this business move is bad right now. As of right now, we are not seeing any results. And if anything, I believe that this could actually be a very good business move. But that's what the shorts are trying to obviously do. You can see it now. In the past, when we've seen this, when we've seen the shorts go above this number, when we see the shorts are increasing this much, it's because the price is about to take off. And that they're doing so to prevent the price from taking off. You can see in the past, Jan 13th, May 13th, and now we're looking at March 27th. And so what we could be looking at is, of course, the breakouts to be happening again for GME. And just like we've seen in the past and talked about, if GME were to break out, so will AMC. The reason, again, highlighted is because the short sellers are both in AMC and GME, and that's obviously what we have to look out for. Now, another thing to be looking at, you can see this. The ask on GME is showing 45.26. Something's off here. And so, like always, every time you see something happening with AMC or GME, you start to see these price glitches. And it's coming to the point where you can't disregard it as a price glitch anymore. Because why is it that every time we've experienced volatility with AMC and GME, a stock, the stocks that we've known have been manipulated has not shown true price, it then shows a completely different price from the market. And the clear reason for that is because that is what the price should be. It should be at 45.26, or at the very minimum, it shows that there are people who are willing and trading AMC, GME at the price of 45.26. And obviously it goes even higher than that, because this should be, countless amount of times. I don't even have it in my mind right now how many times it's been that we've seen price glitches on AMC and GME. And it's just extremely suspicious that it's always happening on AMC and GME. And so that's why we understand that something is going on. You can also see here, cash money right after close that clockwork, 230,000 or 5.8 million, where essentially what we are seeing is just people buying into GME. And so this is what we talked about with how they're trying to suppress the real price, how they're trying to increase the shorts, because they understand that people are buying into GME. They understand that they can only hide certain amounts of shares into the dark exchange. If they don't suppress it through shorts, if they don't suppress it through routing it into the dark exchange, if they don't suppress it through these negative news, then what they will allow is the price to obviously go up. It will allow the price to show true price discovery, like we're seeing here. Now, do I believe GME is worth 45? No, I think it's worth higher. Do I believe that AMC is worth 288? No, I think it's higher. And the shorts know that as well. But what they also know is that if they were to show the real price of AMC, if AMC suddenly were to show a real price, and for this example, we'll say AMC is worth $20, and we see real price discovery tomorrow or on the market open on Monday, then that's obviously going to attract a lot more investors because they understand that there will be no suppression. And that will cause the squeeze, and that's what the shorts don't want. But yeah, guys, thanks for watching. I'll catch you guys next time.